Last month, I profiled a very successful Japanese trader named BNF who made well over $150 million in his trading career. Many of you have commented on the video and emailed to ask me if I could put together another video to explain his trading strategies in more detail, so you can learn more from him. Well, I've gone through an intensive research process to translate his Japanese interviews, his live blog, and articles written about him to give you an overview of how he thinks. Now, there's a lot to learn from him, so I've broken down the video into two parts. So in this video, I'm going to outline 5 out of the 10 trading ideas that you can learn from Takashi Kotogawa, aka BNF, and I will add my personal trading experiences to it so you can benefit from my expertise as well. Hey traders, this is Mike Sir here. I've been an active trader for over 21 years and a trader coach for the past 15 years. In my videos, I profile all the top traders in the world and teach you how to replicate their incredible success. I've been fortunate to train many successful traders, and in this video, I'm going to outline 5 trading ideas that you can take from one of the most successful traders in the world. So let's get started. The first trading idea that I want to share with you is how BNF selects stocks to buy. Now, BNF is primarily a swing trader, as he likes to identify stocks that have fallen a lot and are out of favor with investors. But how does he identify these stocks? Well, when he first started day trading, he was buying and selling stocks by looking at the top percentage movers, which had risen or fallen sharply on the day. So basically your top daily stock movers. But his timing was always too late to make any consistent profit, and he didn't believe that it was possible for many traders to make money consistently by trading only the top movers of the day. So therefore, he started looking at the list of stocks that have risen or fallen sharply the previous day, and would select about 50 stocks which had good price movements in the past, and then he'll put them in his watch list to monitor throughout the trading day. So specifically, he would pull up a 5-minute chart of these 50 stocks and study the timing of buying and selling of these stocks. So then he'll use momentum indicators like the MACD to determine when these stocks would start moving again. Once BNF got into a position, he would typically hold his stocks for 2 to 3 days, depending on the price trend. Now, there's a saying in trading that the trend is your friend. So if the price is going in your direction, then you keep holding it until the trend changes. So let me give you an example of a chart that BNF likes to look for. So here's a chart of SoftBank. Now this is a 5-minute chart. So you can see here that this stock has fallen very, very sharply, fallen from a high of 10,213 all the way down to a low of 7,500. So BNF likes to bottom fish, so he likes to buy stocks that are out of favor or off or falling, and he's looking for a reversal. So let me zoom in here. Okay, so you can see here that the stock has fallen, has low of 74.60. And what BNF likes to look for is he likes to look to see if there's any type of a reversal. So you can see here, it started rising here, jump up, and the key here is it tests the support here 3 times. So let me just show you right here, right here, and right here. So what he looks for is he utilizes the MACD indicator. MACD indicator is basically a momentum indicator, and in future videos I'll talk a little bit more about that, but basically he looks for the momentum to switch from negative to positive, and you can see here it's in the green, which is positive, and he utilizes again basic support resistance utilizing trend lines. So I assume that if he's looking to bottom fish, is he would look to build a position somewhere here and then try to continue holding. So once it tests here, this is where I drew this trend line from here to here, extend all the way out. And the type of trade that he's probably looking for is to buy here and essentially look to sell somewhere around here. So he looks to hold a stock for about 2 or 3 days. This is a typical type of trend that he looks for, and this is how he looks for out of favor stocks to buy. Even though he monitors 50 stocks at a time, BNF doesn't trade all of them at the same time, as he wants to identify the best quality setups. Now he does day trade, but generally only because he is stopped out of his trade. The second trading idea that I want to share with you is how does BNF determine if he should hold a stock overnight. So for swing trades, since you'll be holding stocks overnight, there is a risk, mainly because bad news could happen before the stock market opens up the next day. So how do you decide whether you should hold a stock overnight? Now what BNF and I suggest is for you to watch how the stock price performs near the market close. So if the price closes near the highs of the day, then it indicates to you that the price is strong and that not too many sellers are exiting the stock, and therefore they believe that the price can go higher. Now as well, buyers who are buying near the market close believe that the price can continue going up, so you should feel confident holding it overnight. Now however, if the price does gap down or opens up lower than the previous day, BNF believes that you shouldn't be too worried, as the price should move back up later in the morning. However, I do have a few tips for you to remember. What I would suggest is to not hold any stock overnight if the company is reporting news or company earnings after the market close or at the beginning of the market open the next day. Now the news could fluctuate the stock price based on the investors' reaction to the news or to their company earnings results. The third trading idea that I want to share with you is a concept called KISS. Keep it simple, stupid. Now BNF and I share the same philosophy of keeping the stock charts as simple as possible. So there's no need to to do any complicated chart analysis, and all you really need to do is look for stocks that are in a simple buying pattern. So for example, charts like this where you can clearly see a trend going up, versus charts like this where price action is all over the place. So all you need to do is just focus on finding these types of price movements and utilize simple chart analysis, for example like candlesticks, trend lines, support resistance level, which I talked about in my previous videos. Also, if the general market is going up, then you should only focus on stocks that are trending with the market and going up as well. The fourth trading idea that I want to share with you is look for continuity. So for BNF, continuity is very, very important in the stock price. So if a stock price is going up, then it needs to keep going up and not have any wild price fluctuations, where it goes up sharply and then it goes down sharply. So for swing trades, you don't want to be in volatile stocks, as it's very, very hard to determine the flow of funds going into the stock. And there's a constant battle going on between the buyers and sellers of the stock. Now with price continuity, this eliminates randomness, and this is reason why people say, well, prices are random, the markets can't be forecast. Also, it's much easier to manage risk when you have a stock price go clearly in one direction, and in my opinion, easier for you to play bigger in stocks that have continuity. This also means that you should trade in highly liquid stocks and sectors where there's a lot of interest and you're able to get in and out of a stock easily. So for example, look to trade stocks that have at least 1 million shares traded daily. The fifth trading idea that I want to share with you is focus on how much you can make per trade. Now many traders focus too much on their stock winning percentage, meaning how often that you are profitable on all your trades. So for example, a typical profitable trader will generally be right about 50% of the time on his trades, and the trader obviously would want to improve upon the number of winning trades to be more profitable. However, this is the wrong focus. The focus should be on your risk versus your reward ratio, meaning that when you are wrong on your trade, how much do you lose? And when you are right on your trade, how much do you make? So let me give you an example. Let's say you aren't a very good trader and you have a winning percentage of 20%, meaning for every 10 trades that you make, you only make money on 2 trades. But whenever you lose money, you only lose $1. And whenever you have a profit trade, you make $5. So for example, your winners will make 2 out of 10 trades, so 2 times $5, so it's $5 each trade, you make a $10 profit. Your losers will lose only, so 8 out of 10 trades are losers, times $1, which is the loss on every trade, you lose $8. So in this example, even though you only have a few winning trades, you still have a net profit of $2. So you can see how trading is not just a matter of being right or wrong on your trades, and what you should focus on is losing small and winning big. Thanks for watching. If you like this video and want to watch other videos where I profile the top traders in the world, please click on the left for another trader profile video, and also click on the right for my top trader profile playlist. I'll see you on the next video.